Well, it's a Saturday, and in case you're wondering why you're seeing what you're seeing on your screens, it's the budget day and equity markets are trading. So welcome to ET Now Budget Headquarters. And here's something for you viewers as well. We've got the Budget Master Contest 2025. You've got to answer just a very simple question related to the budget and win a smartphone. So here's your chance to win a voucher for a smartphone worth 30,000 rupees every hour. To participate in the contest, send a hi to WhatsApp number on your screens right now. That's 8104 411 2172. The first question, and you want to note it down, that we're asking today that stands you a chance to win a smartphone is: at what time does the Finance Minister's budget speech begin in Parliament? Your options are A, 9 a.m., B, 11 a.m., C, 7 p.m. or D, 9 p.m. I think this is a very, very easy one to kickstart the day. So to participate in this contest, send a hi to 810-401-9092 with your options. But what does the budget entail? What would it mean for the markets, for the economy? What are the expectations going into budget? Nikunj, what's the budget backdrop in the context looking like?
You know, Asha, budgets are all about assumptions and compulsions. There is an assumption where the economy is headed, and there is a compulsion, which is that what needs to be done to ensure that the trajectory of the economy remains intact. Every budget has a basic backdrop. And we at ET Now feel that the uniqueness of this year's budget would be perhaps focused on revive. Post-budget, it was survive, then it was thrive. They had to take the economy up. But the underlying theme of this year's economy would be revive. I'll tell you why revive. The reason why it is revive is because rupee has plunged to a record low. Markets have been choppy. The economy has slowed down. And we are seeing what could be called as a general drop in the urban spending. So I'll talk about what is not working, but if you really want to do like an Insta analysis of this year's budget, these are the four numbers. You may want to take a screenshot, note it down, which would tell you the budget. Nominal GDP, to simplify it, it's the growth which the government assumes at which inflation plus GDP would grow. 10.5% to 11% is what markets would like. Anything above 11%, markets would say, "Arey, ye to zyada hai." Fiscal deficit, she will stick to a fiscal deficit glide path. That's what the hallmark of all the budgets has been: commit and then deliver. Capex, 11 lakh crore plus, and direct tax growth, which is the income tax what you and me pay, that is expected to grow in the range of about 10.4%. So what is not working? Once you know the set of these numbers, and these are the assumption numbers which will quickly tell you to gauge the market, what is working and what is not working. I guess the fiscal discipline is working for them. Domestic flows and inflation. This is the combination of factor which is working for the finance minister. Flows, SIPs, we all know that word now. So this is working. What is not working? Rupee. What is not working? Consumption cycle. What is not working? Slowdown in the economy. What is not working? Tariff and more tariffs. This is where the challenges are. So just before, Madam Finance Minister Srimati Nirmala Sitharaman was ready to declare victory and take a victory march because inflation had come under control, growth was strong and fiscal discipline was measured. I think tariff threat and this GDP growth slowdown could really force her to do something different.